When looking at loans, you notice that some are listed with a fixed interest rate and others with a variable interest rate. What's the difference? Is one better than the other? Which one is right for you? Today, I'll help you answer all of those questions and more. Whether you're looking at purchasing a home and taking out a mortgage, comparing options for a debt consolidation loan, or you're just evaluating your current debts, something very important to consider and keep in mind is whether you've got a fixed or a variable interest rate. Given the option, which of these should you choose and why? Before I answer that question, I want to remind you to subscribe to my channel. It's free and you'll learn something new about money every week. Thanks. First, let's talk about the differences between fixed and variable interest rates. Every loan has an interest rate attached to it, which is used to calculate the amount of extra money you need to pay back over time. If an interest rate is fixed, it will never change over the life of the entire loan. Pretty simple and predictable. But then there are the variable interest rates, rates that can change over time as you pay the loan back. They might go up or they might go down. You can't be sure. The mechanism that determines whether a variable interest rate goes up or down is usually tied to some national or international standard rate, which changes based on supply and demand in international markets. One of these standard rates is called the LIBOR, and it has to do with the interest rates that banks loan each other money at. Pretty complex stuff that most of us probably don't fully understand or pay much attention to. I won't go into any more detail than that, but I think it's important to understand that in general, variable interest rates don't change by anything in your control or your lender's control. If you're wondering why anyone would want a loan with an interest rate that could increase at any moment due to circumstances beyond their control, then give this video a thumbs up. I'm sure some people are optimistic and believe that interest rates could decrease, but I suspect one of the main reasons is that banks typically make variable interest rates lower than fixed interest rates. If you're taking out a loan that stretches your budget to the absolute limit, that lower monthly payment, thanks to a slightly lower but variable interest rate, could look very attractive. But take a second to think about it this way. Banks who are loaning you money are interested in you paying them back with as much interest as possible so that they can maximize their profits. Surely, they must be employing experts whose sole job is to determine with some degree of certainty which direction those international markets will go over the course of your loan. And surely, they're betting that if you go with the variable interest rate, that you'll eventually pay them the same or more over your loan term than if you'd selected a fixed interest rate. Otherwise, it wouldn't make much sense for them to offer you that lower rate. The fixed interest rate may be higher at the beginning, but you can be fairly certain it won't be higher for the entire term of your loan. If your budget is pushed to the limit, or if you're working hard to pay off debt, you do not want your monthly payments to suddenly increase without warning. There are a few cases in which a lower, variable interest rate could be used to your advantage, like if you'll be paying back a long-term loan in a very short amount of time. But in the vast majority of cases, the fixed interest rate is the way to go. If you would like a lower fixed rate, you can usually get one by reducing the term of your loan, but this will usually come with increased monthly payments. If you can afford it though, this is a great option. Which do you think is the smart option? Fixed or variable? Let me know in the comments. If you enjoyed this video, consider supporting my channel by subscribing and giving this video a thumbs up. Thanks for watching. I'm Andrew Shear, and I'll see you next time.